Good morning, everybody. How you guys doing? Hello. What's the delay on this? It's working. Bagel or Kaiser? Good day, everybody. ah. So I woke up about 10 minutes ago. It may take me a minute to get warmed up. Good day to you all as well. Happy Saturday. I'm doing okay. Cool Daddy got the 3-month badge. Yeah, it's a golden pickle. I'm just saying. Super delay? Yeah, hold on. Can I change the latency? Of course not. Why would they let me do that? So I tried higher latency and it was clearly a mistake. Just play packet 2x. Nice, Dan Destroyer of VWAPs. Did you see the love fest for you on general chat last night? No, I didn't. I was busy answering the 964 messages that I got last night about what sub I'm moving to. And people asking me to be a mod on GME Jungle. I'll pass. I've seen the dumpster fire that mod ship turns into. What's up, VWAP, sir? Yeah. Subreddit drama is of the highest priority. Whoever made that like Tickle My Pickle podcast, that was some of the funniest shit I've seen this week. I don't know. It was good. But you don't want to be the next drama star? Shocking. Yeah, I'll pass. Yeah, I mean, I wouldn't have time to do it effectively anyway, so I would just be there in title. And that doesn't interest me. I would be able to pin my daily TA every day and delete Elliott Wave posts, both of which I find high value in. 700, 730, 275C called pretty cheap yesterday. Nice, dude. So, Gert, did Friday's close below 180 keep you salty all night? No, not really. I mean, I'm very curious what happens to the, like, what did we have? We had, hold on, let me, so, I just close that. We had like, 44,000 or 440,000 out of the money options that expired yesterday, and then another like 1.2 billion dollars worth of at, near, or in the money options that were closed yesterday or expired yesterday. Oh, goddamn. Hold on. This fucking epic pen. There we go. And so, you know, should be an interesting Tuesday. Can we address the Superstonk drama and get it over now? Yeah, I don't give a flying fuck about it. It means nothing to me. Um, Red Chess Queen and Maddie should step down from Superstonk, and that should be just the end of it, right? Or, or just all the mods step down except the ones we don't know about, because like Adabit and Renzel and all of them are just like, that's just like gonna also happen, right? Like that's just gonna blow up someday as well. I don't think Red Chess Queen should remain a mod after, threatening anybody. That's kind of the end of that story, right? Who would want to be him? Did you figure out the Wyckoff stuff? Not really. It was a good possibility that I'd just been awake for 27 hours and looking at charts for too long. There was a distribution there. It did effectively bounce off of the support of the previous distribution. I'm guessing that we saw it play out on such a short time frame because so much capital was um, shoved into the stock in that period of time, and so I think that's why we saw it play out. Um, both phases of it are complete, and so I think we can just move on to a return to normal price action, which probably just means up. Question when you're oh, please, we do have more people in here today, so if you guys could just try to at me. I know you don't usually have to. I'll try to get the ones that aren't able to, because I know on mobile it can be hard. But good afternoon, Johnny Diamond Hands. Sup, Claw Range? Question when you're ready. Short spent millions to attack the price, destroying TA since a breakout was imminent prior. So that means push back in your term, or do we have to build new formations? I think it just pushes it back. Not even that much, honestly. We can take a look at the current forward TA and where we're sitting. I didn't expect a lot from last week, and not a lot came of it. The shorting was a surprise, however. That was quite the amount of money to dump. Yeah, I know. Pink went ahead and made another sub. Mods need to be voted and rotated term limits. Welcome to the world of Reddit. Like, this shit's been going on since Reddit started. And also, like, things like 4chan and stuff like that. There's always been these, like, stupid mod drama internet forum things, as long as there's been internet forums. Maybe I'll just only post on Dillionaires from now on. Have we kicked out the pores yet? No, they're still in here. This is their day to come enjoy the facilities. Core of the play is to buy yourself time, but do the Citadels of the world really have any outs other than just prolong the inevitable? I mean, no. But just because like if you're in a tunnel and there's a train coming at you and it moves faster than you run, are you not going to run? Like, just try to think about it logically, right? She doesn't own GME either. Who? I don't care. Let's move on from the sub drama. My relationship with Reddit is becoming more and more tentative on a daily basis. I only care about the people there, not the mods, the subs, or the drama. Oh yeah, the fallout's absolutely a problem. It's a divisionary tactic. Um, Unfortunately, the way it looks is that the division is being propagated by Pink Cats, as she has gone and started her own sub, yet further dividing the ape community. So now we exist in 4 subreddits instead of the 3 that we were already split into. And I think all the mods are at fault for that. Yeah, we discussed Wyckoff. If you guys did more research about Wyckoff distribution, cool. It's good knowledge to have. You'll see those patterns play out on long-term time scales and stocks occasionally. You can see one on Bitcoin right now if you want some more evidence of how they should look on a long-term time frame. The cup and handle done. Yeah, unless we move back into the handle. Which we have not yet. Although, I mean, I expect that the supporting ascending triangle will remain true. I can bring that up, as I believe I've edited. I haven't done a lot with this yet, because I fell asleep like right after the stream yesterday. But as you can see, the ascending triangle, I've shifted. It didn't really change anything. I probably need to adjust this to there. And then that's probably about it. Yeah, the cup and handle is just kind of invalidated right now, but there's a very good chance if we rip on Monday or Tuesday, like I expect, that we could easily like reform the handle with just this like slight deviation of a few days, right? She's still 100 AMU. So Vanguard bought 330K of stock. Was that at the money offering? I mean, it must have been, right? We haven't really seen an institutional buy-in. It could have been over several days. Like it may have been like here. It's not a lot of shares. Um, it's interesting that Vanguard averaged up their position on the move, right? Because like all the news was like, oh, all the ETFs are going to sell down, but now we know that Vanguard averaged their position up, implying that GME is more heavily weighted in the Russell 1000 than what the news media was saying. Which, I mean, I said before, but no real proof of it until now. I'd imagine by the time 13Fs are released, we'll have a much clearer picture of that. Do it. I say we make Dillionaires legit. You might feel that way, but I feel like Secure and the mods over there may not want to deal with that shit show. Maybe it'll just be like you can only post DD and things I find amusing. I'm not starting my own sub. I already have my own sub, but it's not for GME, right? It's just for like memes and community shit. I would be tempted to go to Pink's new forum, but after her performance at the shareholders meeting, and no thanks. Notice adept socially becomes a Reddit mod. That's true. I would do that, Johnny Diamondhand, but I feel like that would just lead to me becoming even more obscure than I already am. Which I don't think is beneficial for the community, as I do feel like the stuff I make and the work I put out there has value. I became a Dillionaire now and it didn't pop up in chat. Well, thank you so much for becoming a Dillionaire, Starlight. Hit me up on the Discord and I will add you to the private Discord so you can get away from what is very rapidly becoming a shit show in the regular Discord. And whoever mentioned it, I'll add a private, like a general chat to the Dillionaires Club. I guess this is why private Discords become a thing. Yes, embraced us. Well, that's what they're trying to do. Aloha is they're trying to stop the train, but that doesn't work. I would take my shoes off, put my socks on the tracks, and then just kind of like brace myself and see if I could just slide through the impact. I would die, but scientifically. You remember the volume on Jimmy yesterday? Yeah, it was crap. It was like 3.21 million at close. They're individually still making money. Every day means they personally get richer. That's true. And it may be very hard for some of them to get a job after this. What was critical about last week that caused such a massive short attack? We were going to go up. The same thing that was critical about this juncture and this juncture was critical about this juncture. They just attacked it earlier, right? I mean, they did the same thing here. Remember the breakout from the big wedge? When they just like shorted us all the way down as much as they could. And then we ripped. And I guarantee if we look, this was like a Tuesday or something. What was the 13th of May? May 13th. Thursday. But was that the first up day? Hold on. Let me look at the other candles. So this was the first up day. This was the big short. So it was the 10th. What was the 10th? The 10th was a Monday. So maybe we'll see them bring it down super hard again Monday. And then we'll start the uptrend on Tuesday. As they have to cover the market makers have to de-hedge from those contracts. Sorry, I forgot words. What am I drinking today? I have some espresso and a water. Not as much espresso as I would like, but I didn't have a lot of time. Also, it's super under extracted and it tastes like piss. Yeah, okay, yeah, that's a pretty good point, man. Last week, proof that short MMs are in complete control of the price, even when longs take an interest. Well, longs had a much less substantial interest, right? A lot of the long position was people YOLOing in from like Wall Street bets and shit, right? But like, I mean, you had like 1.2 billion. Shit. Epic Pen's just gonna be awful today, isn't it? I feel like it's getting worse. What? Closed captions? So shorts had 1.2 billion. Tied up. Longs were at about half a billion, right? But the shorts weren't just attacking from GameStop, right? They were shorting ETFs and this was just in GameStop. So the longs kind of ran out of like effective contracts, and I guess they overextended their capital, or their goal was to just force like spend, a small portion of what the shorts do and then force the gamma squeeze on Tuesday, right? Is everyone's TA different? Does everyone interpret charts differently, even though it's the same stock, or is there a standard that everyone follows? There should be a standard, but that is, in my experience, rarely the case. I think the best you can hope to attain is to do it, to use indicators in the way they are intended to be used, and allow yourself no variation, which kind of requires some discipline, but I find that at least I have found more accuracy in that approach. But yeah, there's no standard, unfortunately. People just draw lines a lot of the time. A lot of the time, people don't really understand how things work, or they, try to make them work to fit what they're looking at. I try to avoid that as much as I can, but obviously, everyone has bias. You don't have a source of the Vanguard shares? I don't. Probably like whale wisdom would have it. Nice pickle tatership you got here. The Gospel of the Dans on our Dillionaires is incredible and should be pinned. As should that Tickle My Pickle podcast. Sad thing, I was 35th. Look at my new icon. Yeah, I know, Charlie. That's fucking dope, isn't it? Can you make Craig a Dillionaire in Discord? Is he one? Oh. Um. Here, let me just. Am I high enough rank for the paid Discord? The paid Discord's at Dillionaires membership. BBKC stopped showing fire signals. I mean, no, it didn't stop. It squoze. It squoze, and now it's expanding. That's how that works. But that would be the point at which it stops showing fire signals, Eric S, is when it expands. I tried adding you yesterday after stream. Could we have a music in Discord like we do with gaming? I already put one up. There should be one. People have posted in it. It's there. The channel's there. Sean Daniels. Some people will paper hand who are relying on Reddit to hold their hand. Yeah, possibly. Billionaire takes on the world wearing smelly socks and a pickle hat. Red was saying she doesn't even hold Jimmy or believe in MOASS. I don't give a shit, KO. Who cares? They just need to remove any of the conflicting entities from the subreddit. End of story. And then we can all move on with our lives. 400K out of the money puts. When will they know if they brought them back until later? I mean, I don't think those had the significance people think they do. I'll find out soon what they were for. Um, Based largely on the price action of Tuesday. But I think for the most part they were just like post squeeze volatility plays that were super cheap. Those contracts were like $5. There's not even that much money locked up in those contracts, right? How will SPY's behavior affect the short hedge fund approach on Monday? We'll have to see. I don't know what's going to happen to the SPY in after hours. I didn't even look, actually. I can look right now. Did something weird happen to it in after hours? Did it sink more? It would when all my puts expire. Boom. Yeah, I mean, it could come down pretty hard on Monday. We'll have to see. It may rally back again. It's not, in a correction, so it's just possibly entering one. The market, if nothing else, is resilient, right? Essentially, will this be bad enough that the U.S. loses its standing in the financial sector? No, because we're still the reserve currency. I think the scariest part about that is that the U.S. has the power to just destroy any other economy. Oh. I'm surprised the Longs gave up on Friday. How much did they spend on that ramp? I mean, they probably cashed a lot of it out, right? On when we hit when we tested 180. And then the rest of it, not that much, right? Like the out of the money, there wasn't there was a lot of out of the money open interest, but most of it was bought very cheap, right? It was bought at like 3, 2, and 1 DTE. So it's not like they were holding those contracts since they were like valuable. So they probably didn't lose nearly the amount of money that the shorts lost. The shorts lost a ton of money because they threw about $500 million in the money puts at like $155, and we closed above max pain. So bear side did win, just not as much as we'd have hoped. What is this charity YouTube? Can a minimum short interest be calculated based on daily short volumes? E.g., 60% daily short volume implies the short interest must have increased at least 20% of that day's volume. That's correct. That's how you calculate it, Chance. It is the difference in short to long volume carried over. So you can find out exactly how many shares sold short carry over to the next day. How is the super? And if you can calculate that all the way back from December at Ryan Cohen's second buy-in, or you can calculate it from August, which is technically correct, at his first buy-in. DD's going all right, I think. We still have a few more days till our next confirmation comes through, but as I said, this week we weren't really expecting anything super consequential. Any chance of an explainer on Ichimoku Cloud? No, and if you're a new trader, don't use it. It's mostly just a jumble of indicators in one giant indicator. It's kind of predictive, which is interesting. I do use it on occasion, but it is quite complex, and it would take me a while to explain like how to properly use it. Maybe that would be like something beneficial in its own video or something like that. Yeah, it would take up too much time, unfortunately. But I don't recommend using it until you're very familiar with it, as it has a lot of false positives on its crossover events, and noticing when those false positives happen is pretty important. Hello, Dillionaires. Seems like going to be a business lounge in here. Explain the DD's coming along fine, Yeti. Just so you guys know who haven't been in here before, I try to use this time to get to everyone's questions individually. So it can take me a while to get through the chat, but I will catch up eventually. The Ascent phase and what volume will look in your exit DD. I'm trying to understand what it will look like to get to the 1 million floor. Will the pressure be a little consolidati? Here's the Ascent phase? Like the forced liquidations? Is that what you're referring to? Or just like the whole phase? Or is there like a specific part of that phase? Just let me know. Is there like you want to know the whole phase or just a specific part of it? Can you describe a little more about Max Payne? There's not that much more to talk about. You have open interest on both sides of the strikes. And Max Payne is the point at which this is price. An open interest. Max Payne is the point at which the majority of options, long and short, expire out of the money, which means market makers who sell option premiums make the most money. Because the majority of contracts expire worthless. And so the person who benefits from that is the market maker. guess you meant bull side. I probably meant bull side. If I misspoke, sorry. I haven't been awake very long. How often do you clean the greasy lint gunk off your mouse scroll wheel? I don't really get any gunk in my mouse scroll wheel. Yeah, my mouse scroll wheel pretty gunk free currently. It's got like an exposed wheel, so maybe that helps. Thanks for letting the Euro pores in the stream today. Absolutely, Snickers. Seems like most stocks have a huge volume spike in their first minute of after hours. That's kind of just carryover and the rest of the order book filling as the market closes. So it's common. It doesn't really have anything to do with GameStop specifically. Guess yeah, the whole ascent phase to get to the peak. So what will happen is very similar to June's price action. If you were following me back then, we had this ascending channel of like bull flags, right? Kind of increasing in volume and volatility as we went up, right? This is the beginning phase. This is like phase one. And eventually this will reach a price point at which FOMO begins to come in. This is phase one. And then when FOMO comes in, this is the point at which the price reaches a level where it garners the interests of like mainstream media and the general public. They will then attempt to pile in, chase this price action, right? As this price action is fairly slow, eventually one very large bull flag will form that pushes the price into a range where, you know, FOMO begins. And then FOMO's kind of hectic as, you know, people get scared, they paper hand. So during FOMO, you can see the price go up, and this will be the most volatile, like violent period, right? Where we can see like dips like that before climbing back up. Eventually, with FOMO, we will reach a price that causes forced liquidation. And so once we hit forced liquidation, you're just going to see the stock just up into oblivion, right? There'll be tons of halts as it moves higher and higher. There will be gap ups, so it will go up, gap up, and then continue. It'll halt here after a gap up, but as the bid ask spread becomes wider and wider during this forced liquidation period, this gapping up could even happen during the FOMO stage because of GameStop's low liquidity, which means there's no shares available, right? And so if you put in a buy order at market and say you want to buy 2 shares and there's one on the at you know 500, and then the next one is at 12,000, right? You'll buy this one and then we'll gap up to that price. That's not how it's going to work, but that's just an example. So let me know if you have any more questions about that, dull guy, and I'll or if that was sufficient. Gotta go. See you later, John. I see no profit motivation for short side in the data on Friday. Just desperation. Almost looks like the shorts never covered, and 169 is way too high for them. It's not 169 they're afraid of. It's 180. I kind of explained it on the stream yesterday. 180, which you can see in the price action here. I could probably draw a support line there, and you can see the way we kind of float around it. Settings, coordinates, 80. Okay. If you look, the price has floated around 180 all the way across, with brief drops below and even fewer above. 180 is important because when it passes 180, then it passes 200, and 200 is psychologically significant. The whole reason they cut off buying in January was to stop FOMO. This is one of the reasons we know they didn't cover, right? Is because as soon as they cut off buying, the price of the stock fell, right? So it wasn't, and also, confirmation from the DTCC that there were no margins called, right? So if MM's collected all the premiums from the out-of-the-money contracts that expired, does that mean Citadel is collecting a lot of that, or is that a separate MM that handles options contracts? Citadel is one of the participants in CBOE, in the options market, but one of like 9, I think. One of 9 or one of 8 active participants in CBOE's marketplace. So, yeah, I mean, it's not like Citadel's just making all the money from everything in the market. They're big, but they're not even the biggest, right? They only have like 32 billion in assets under management. You compare that to like BlackRock that has trillions. They're 38 billion assets under management. It's low. Not to mention, Citadel is not the only person short the stock. There's other entities like Point72, Susquehanna, Melvin. If Melvin's still short the stock, they probably are. Like to get your shorts back. But out of the two things, what would cause MOASS, GME catalyst or market crash? Given the current pending SEC investigation, yeti, I would imagine that a market crash, also given the condition of the market, I would argue that a market crash or major correction is a more likely catalyst. But the catalyst is, how do I say this without giving away too much? The catalyst is built in. You have to understand that it's a slow burn. The fuse for which was lit back here in January, right? Here's the fuse, and it was lit here. Right? And eventually that goes boom. You don't need a catalyst for that to go boom. If you know anything about business and you know what like burn rate is, Essentially, it's the amount of time a business can survive at a consistent loss, based on the capital they have. But you know, obviously Citadel and these other short entities are, you know, cash rich, but there's still a limited amount of time, regardless of catalysts. Why there was no FOMO when we went down to 160? Very deep dip. So while dips might be exciting to apes, Muhammad, um, logical investors that have heard nothing but bad shit about a company for, you know, 6 months see that company's price falling, and they're not very encouraged to buy in, are they? That is the like, everyone's like, oh, MSM doesn't mean anything, no one trusts it, but that's not true. Otherwise they wouldn't be doing that, right? That psychological effect that the news media can have on stocks is very valuable. You see short entities using it all the time. It's very common practice. Did I move that? God fucking damn it! Whatever. Not in terms of anything above $10. Desperation, like the short server. Yeah, I mean, any price above where they shorted it, Sam, is too high. So will volume be highest in the FOMO and less volume during liquidation? Yeah. Well, just because liquidation's gonna dry up the liquidity in the stock. My really dumb question is really, when do I place that first 5% stop limit order? At the first wedge. So forced liquidation is very obvious, right? It's just solid green. Every single buy order that goes to market is filled. The order book's ask side is completely depleted. Like, it's a very obvious stage. You can kind of just sit there and watch it, as if you attempted to put in a market order from one halt to the next, it's very unlikely that it would even fill, right? Just because the buying pressure is so high. That first wedge at the peaks is going to form probably after short interest has, like, the synthetic shorts have been bought and the short interest has finally dipped near to or below 100%, right? Because at that point they're going to start to attempt to probably manually cover the stock instead of algorithmically, as the price will be so high they don't want the algorithms to continue spitting cash out. Remember when we finally won the fourth battle of 180? We shot over 200 the same day. I do. When you started streaming, did you anticipate it would last this long, potentially through summer? Yeah, I expected it could last a while. I mean, at least I budgeted that in. But we'll see. The channel's growing. I mean, it's it's definitely not at the levels of my previous job, but I do have, you know, savings and stuff. So I don't have to stop anytime soon. And I'm more than prepared to hold GameStop for at least this till this time next year. Maybe. Won't they just be waiting for people to put in sell orders? Essentially, yeah. But you know, they will also jump the bid, and that's why I recommended everybody be very like conservative with the exit points, right? Because you know, if we peak here and everyone sells 100%, right, then it's going to start to come down. But you know, if everyone sells like 5%, then they're like, we need more shares, and the bid gets popped again, right? That's just maximizing your exit at that point, though. By spreading your exit like that out, you have more opportunity to sell at the absolute high. Or at least sell some of your position at the absolute high. But weighted all those separate exits together would be more profitable than exiting 100% just when it stops going up. And they'll do things like try to trap people in the run up, right? At like once that short interest is below or at 100%, they may, you know, turn off the buying pressure for a second to see if they can get people to sell at that first wedge, right? And then turn it back on, right? And so like some people might exit here, but that's the beauty of the stop limit, right? Is that if the price goes up from the wedge, then you don't sell anything, right? Was that resistance line potentially getting lower? A little bit, but no. I mean, that's the entire thesis behind a cup and handle is that people sold here, and then this one shook more paper hands, and then at the next test of that same resistance, we should pass through. That's the theory behind a cup and handle. Is that the third test, the buy side at that resistance is stronger. And that's why the cup and handle's not really invalidated, right? Because like the thesis behind the cup and handle remains true. And that if the price reaches that resistance again, buy side should be higher. It should have more pressure than sell side is able to maintain. I hate dips and I hate those who beg for them. Just buy. I agree. But, you know, there's always new people coming in and looking to uh, set their cost basis. And that's not a thing you want to discourage. Like dips aren't great, but, you know, generally people will just buy it, whatever. Especially uninformed investors, like they're not going to wait till like we reach an all-time low and then buy in, right? They're just going to kind of like buy at the low for the day, which, you know, obviously doesn't give a lot of upward pressure, but retail buying doesn't give very much upward pressure. The only things that really affect the upward pressure are institutional buying and options, because options are essentially institutional buying. But like retail buying, like 5 shares, isn't going to really affect the price much, if at all. Speaking of loans, you gonna take the bank up on their offer? I don't know. I wanted to go in and like find out what the terms were, but I'm pretty sure that they close at 2 and I'll still be streaming, so. Do you have any theories as to why the borrow rate is so low? I do. I have an entire DD and video on it, Foti. You can go check them out. No, one is pinned to my Reddit profile, the other's in the video DD channel. So once it peaks begin, that means that liquidation is over? No. It just means that the short interest is now they are at that point, right? They are then hunting for real shares, real deliverable shares. So that means they've bought up the 98% of synthetics required to get to that point. And now they are hunting for real deliverable shares. How long do you think the fuse is, or better yet, do you know? A little longer. Cool, Daddy. Seems like Jeffries and a couple others realize the fuse is lit and don't want to lend to the shorts because they want to protect themselves from exposure. Why would others keep lending? To collect collateral. So any of the lending questions, I feel like I cover very well in the GME 1% borrow rate DD. That's where I currently stand on it. Although some of my new research may be diving a little deeper into that. I think the general gist of it can be very well understood by checking out that DD. Is it the DTCC who will trade or the short hedge funds? Most likely at that point, the DTCC, Ryan. You're talking about price levels at which the hedge funds would have been fully liquidated. The DTCC in the past in high volatility events like that after a forced liquidation has pushed up like the buy orders and then started trading manually through the peaks. I think it happened on DGZF or something. It was like a natural gas company that had a big short squeeze. That was manually traded through the peaks. There was a couple other ones. There was some manual trading that went on with Volkswagen in the peaks. Ultimately, the manual trade is beneficial for us. While the price won't raise as much after they begin manual trading, it does slow down the price action and volatility significantly, which means that exits in those points will be more profitable, right? Especially given that some of the people don't have access to various types of limit orders that protect them, and are going to be forced to use market orders. That is really beneficial for them, which I understand is not a majority of us, but even for the rest of us, slowed down price action is fantastic. It's one of the reasons I'm holding my extra 10% of shares, right? It's not just that like I care about apes that have very few shares. I do. But there is an advantage to holding that 10% of my shares, right? And that if a lot of people do that, if a lot of people don't sell 10% of their position, it can cause the peaks to last much, much longer, which makes them much more profitable, right? And so by holding that 10%, I could increase the profit of the 90% of shares I do trade by 50%, right? And so that's a very small loss to take to increase the profit of the rest of my position by so much. When the price is going up, a market stop occurs. I remember the price dropped when traded started again. Is there anything to glean from this? How do we determine if it will go back up afterwards? So during the FOMO stage, you'll see that when halts occur, you'll see it run into a halt, and then you'll see it sell, right? And then it'll probably then run into a halt, and you'll see a sell-off after the halt breaks, and then more run. Just ignore this, because during the forced liquidation, after a halt, you might see a candle start red, and then it'll turn green as it goes up. So you shouldn't see, as we've seen on we kind of saw there. I think there's a video on BBKY, BBBY, Bed Bath and Beyond, that you can look at in the stream clips. It's in one of the playlists. I can't remember. But you'll see that all the candles are green, just going up. And that's kind of a margin call, forced liquidation type situation. I don't think the action was strong enough for it to be forced liquidation, but it did appear like somebody called that position. And so you can go look at that, and you'll see that, even after the halt, all the candles continue to be green. Henkin Ashi is beneficial there, and it just won't show a red candle unless it considers a trend to have shifted. But yeah, don't get baited by post-halt red candles. Confirm a downtrend before considering setting a percentage exit. Well, that's what I would do. Obviously, none of this is financial advice. Do you think forced liquidation could take us to millions per share already? Or do you think that they will only go to thousands? I think it can go to millions a share. It's not that there's no question about the upper levels, Janiski. Like the 10, 20, 30 million dollars per share. There's no question about this. The question is who holds that long. It will hit this no matter what, due to share lockup. Whatever the peak can be, whether it can only whether it's only possible for it to peak at 9 million or 15 million or 20 million, whatever the highest potential possible peak is, GameStop will reach that, right? The question is who's holding at that point. I guarantee you that very few people are holding when it hits $10 million. The more shares they have, and these guys, ironically, the less likely they are to hold at those levels, or to those levels, right? If someone's got one share, right, they might be more likely to hold. Now there is the I don't know the name of it. There's a philosophical name, I guess, where it's like a kind of a fallacy, and that I know casinos profit off this a lot. If someone puts $10 on a craps table and turns that into $100,000, they're more than likely to run that all the way back down to $0. Like, it's very rare that they walk away with a $100,000 win, right? So that'll play into it. But I mean, at 100,000, people are going to sell. At 10,000, people are going to sell. The point is because of the share lockup and the percentage of the float sold short, it just doesn't matter who sells. I've said this before. I'll say it again. If you want to make 10 million a share, you got to fucking hold them. That's it. That's all you got to do. You just got to hold them till you like the price. Had any more cold French food left outside your door again recently? No, but I had some cold Chinese food left outside my door recently. Say it halts. Could you place a stop limit at the halted price slightly below the lower price to sell a percentage of your shares? If it doesn't go down, then you get to sell at a higher price. It'll always... Here's the danger of setting stops after a halt. Immediately after a halt, the price will go like this. So you halt into this, and the first 2 ticks, maybe first 5 ticks, the price will have a massive amount of volatility before it narrows down on a volume band, and then the volume begins to build. So no matter where you set your stop, you'll just lose shares. That's why you wait for the wedges, because wedges are a sign of a lower volatility period, right? Those are a consolidation period where buy side has fallen off and sell side has begun to gain some momentum, right? You don't want to sell in high volatility windows. You will lose lots of potential profits that way. Everyone's afraid of halts, and that's what causes selling after a halt. 17 the goat. And don't be one of those people. Don't be baited by halts. Because it's not going to run up into a halt during a short squeeze and then just immediately come back down again, and that's going to be the end. That's not how it works. If that happens, it was never a short squeeze. Yeah, so Mohammed, if you set a sell order when we're trading at, you know, $160 at 1,000, the clearinghouse that receives that order will kick it because it is too high of a percentage above the current ask. But you can see a jump, I believe, depending on the clearinghouse, of 600%. So self-clearing like Fidelity, their clearinghouse allows a 600% gap, right? So if you're trading at 200, that allows the price to jump to 1,200. Does that make sense? Some clearinghouses don't accept that gap, but yeah, I mean, you're talking about like 1,000% increase from like our current price. So yeah, the clearinghouse is going to kick that order. But as the price goes up, you know, if we're trading at $1,000, 600% is $6,000. That's a much more significant jump than 200 to 1,200, right? I feel like my math there was wrong. You guys get the gist. I'm tired. Yeah, absolutely, Footy. Knowing what you know of the real SI percent, where do you think we'll be price-wise by the time we hit the first wedge? That's hard to say. There's a lot of factors that affect that. Just trust the technical indicators. Don't look at the price isn't what's relevant. It's hard to say. It could be much higher than I expect. It could be lower than I expect. The rate is impossible to tell. But I would say that the wedges will begin to form within 50% of the absolute peak. And remember, it's not the first wedge that you're selling on. The first wedge is just a confirmation of the peak. You want a couple wedges to form to confirm that you are in fact in the peak. Because they, like I said, they can trap people with a wedge, right? They know people are going to be looking for that as an exit, so they may allow one. They may halt algo buying briefly to allow a wedge to form and price action to slow down to encourage people to sell, right? And then turn the algo buying back on and the price continues to run up. And then, you know, if you were baited by that wedge, that first wedge that formed, you could lose potentially millions and millions of dollars, right? Slow and steady wins the race. You have to be patient, calm, and reserved. And that's why I've tried to provide you guys with as much information as I can so that when we get to those points and when that kind of money is on the line, you have the confidence in your knowledge to handle that situation, your own personal knowledge, because no one can be there to hold your hand through it. Out of a minimum of 47.2 million shares to the total short position since 125. I always wonder why we never see this math anywhere. You know what's interesting? What else is interesting, Chance, is that that's also about how many shares are locked up in out of the money puts and quarterly options every rotation. And also about the size of GameStop's float before the at the money offerings. Greetings, fellow elitists. So anybody who's just joining in, this will be posted as a VOD, also open to all of the Cornishons immediately after the stream. So if you missed anything, don't worry, hang out, enjoy what's left of the live session, and then you can go back and watch the rest immediately after the stream is ended. It makes watching. I can't watch regular candlesticks anymore. And I worry that like sometimes I miss things because I'm on Henkei Ashi and it smooths things. But yeah, it's still preferred. That became an issue recently when I was looking at this bounce. This bounce doesn't show up on Heiken Ashi, right? But if you look on the regular candlesticks, it's very clear. Like it very clearly bounced off the lower trend before then continuing to fail. And then, yeah, we have a, this has been adjusted, this low trend. I've adjusted this. This was higher up, but we are turning around here. This is a nice bullish reversal here at the low trend. Honestly didn't expect they could drive the price that low or that they would pump that much money in the options to do it. That was it was a surprise. They really went all out. I'm sure that's my own fault for not considering that they would have a little more power this time due to the at the money offering, right? Because the at the money offering released more real shares into the wild. And so I should have known that at this intersection. So the previous at the money offering here allowed them to dip the price also below the expected range. If you guys remember, we had a solid floor set at 157. This time we have a solid floor set at 225.20, right? But this at the money offering was 3.5 million shares, so less. And then that also gave them additional firepower to bring us below. If you guys remember that wedge breakout, and the formation is almost exactly the same. I guess I should have just factored that this time. So I made the same mistake twice for kind of different reasons there. But sometimes it's also something you can only really predict in hindsight. Yeah, instantly becoming a millionaire will make a lot of people paper hand. It's psychologically rough. I mean, I've had a position go from, like I think it was $700 to 37,000. It was like 37,500. And this happened in like 24 hours. I sold. If I'd held, I would have got out with like 43,000 in gains. This trade, obviously, unlike GameStop, in the sense that I would not sell there at GameStop, but it's every time that happens, it's hard. It's very, very hard. That's why I said write down your exit plan and stick to it. Don't negotiate with yourself. Don't talk to anybody else. Just stick to your plan. Make it now when the stock is worthless or you're under. That way it's what you really want, right? Don't let the elation of the moment wrap you up and control your actions. You got to be a cold, hard killer when the time comes. Is it possible to be a bag holder with GME? Yeah, because there's no fucking infinity pool. I'll be very clear about that. So yeah, if you fucking hold through like, the peak to the other side, they will use those deliverable shares. Like once they hit 98%, right? Like 102 to 98% short in those peaks, they can start cycling them. And so like 98 can go to like 44 or like 47, and that can go to like 23. And then the demand for real shares will start to fall off, right? And eventually it will completely fall off. So yeah, you can become a bag holder. No problem, Vic. Well, I set a limit on our profits. I'm not sure what you mean, Alethea. There's no limit. It's just how long you hold. That's the limit. How long can you psychologically hold your shares? And for a lot of people that say 10 million's their floor, they just haven't experienced something like that yet. To say 10 million's your floor is going to require an insane amount of resolve. Does your DD revolve around the lit fuse, or is there more to it? Is it date or price based? Kind of all of those things, no case. Do you get tired of all the same repetitive questions during the daily stream? Sometimes, only in the fact that I feel like there's 1,200 people who've heard the answer and one person that needs to know it. But I mean, the reason behind me doing this is that I do it for the one guy who kind of needs to know the answer. And so even though it might be irritating, I still answer it. I'm sorry, guys, for you having to hear the same answer to the same question so many times. But just remember, that's one more ape who understands, one more person holding the stock
and one more person learning how to hold that stock and how to exit, and one more person confirming our exit strategy and, you know, everything going forward, right? And the more people on the same strategy, the more effective that strategy, right? It's like the reason Elliott waves and Fibonacci sequence work, because a bunch of people use it and it's sort of self-fulfilling. Oh, I got a gold pickle. You did, Jamie Uranus. Welcome to the Gold Pickle Club. There are more pickles on the way. Unfortunately, I've only been streaming 3 months, so you guys are all kind of at the limit. I'm here, everyone out of the hot tub. Are you streaming through a wedge or two, or are you stopping immediately when the forced liquidation starts? As soon as I believe forced liquidation is occurring, I have to walk away. Because I don't know how many gap ups there will be, right? Because we don't know the percent short, right? We can estimate it. We know it's more than 140, and that's it, really, right? So that forced liquidation phase could go on for a much longer period of time or a shorter period of time. It could gap faster than expected. You know, it could gap 10,000 to 600,000 very quickly, right? And then it could gap again to like 2 million. Like that forced liquidation period, because of the now, like back when I wrote the exit DD, there was still liquidity in GameStop. Now there's none. And that means that forced liquidation period could run the price up much, much faster. So you may not have days before the peaks start to occur, right? And so, yeah, I would have to walk away immediately as soon as I think that is happening. You may have like hours before you reach 10 million, which, I mean, ultimately is beneficial, right? Because during forced liquidation, there's a possibility that you could put in an order and it'll just never fill as the price continues to run up. It could be 20 minutes from the time you put an order in until it fills, and that may actually force people to be diamond hand that otherwise wouldn't have been. So since there's no liquidity in stock, the ask price is going to jump 600% from a price point. Yeah, but people will sell, right? Like liquidity will occur in between those intervals. It's just when those intervals happen, it's not necessarily going to jump 600%. It might jump 25. It might jump 50%. It might jump 600. It just depends where the next order is. If that order is 10% higher than the current trading price, it's going to cause a halt. And then people will panic sell off of every halt a little bit, and then it will continue to rise. Sweet. Now I've got 2 gold pickles. Is that for 3 months? Thanks for making me feel rich already. Even before MOASS. You're welcome. Jamie Uranus, thank you for the donation, man. Do you think we could start seeing the bull flag on Monday, Tuesday, then fade into the weekend pattern again? I don't know. Based on the amount they've tried to drive it down, I don't. Yeah, probably, right? Like the previous pattern of Monday, Tuesday, Wednesday, consolidate. Monday, Tuesday, Wednesday, consolidate. That could begin. That was the pattern that we had throughout this whole section here. So that could begin again. But given that there's less sell pressure now, right? Because this is the triple test of the resistance. It may run up significantly more before at each event, right? Which then causes FOMO. So it may not last as long. It may not be as steady and consistent as that previous pattern was, because things have changed. The liquidity is much lower than it was in the last run up. The reality is $1 million isn't that much depending on your age and interest. Yeah, it's not. $1 million isn't very much. in the scheme of things. But for some people, that's more money than they've ever seen in their lives. That's more money than they've seen in their life and their parents' life. That's more money than they'll ever make at their job. You know, this is, you have to understand that, like, you can say that now, but can you say that when you have, you know, $3 million in your bank account, Claw Range? Read all Gurk DD in a grimoire written on paper hands and bound in pickle flesh. Price drops could be from 1 million to 630K. My math might be wrong. No. It's the price drops would just be halts, right? So on the back side of the wedges, it'll just halt. Halts aren't at 47% drop. Halts should be at 10 with some flexibility as it takes them a second to halt it, but is it possible for retail to figure out burn rate with existing information? Also, how do we find out what the SI percent is? Could you find out burn rate? It'd be very hard. And you can only get an estimate of the SI percentage. Somebody else in chat was just doing it, Dr. K. You can estimate how much short interest is carried over, but you don't really know how much short interest was going in to the run up in January. So it's very hard to tell if it's hard to tell, you know, what's been used to suppress the price and covered, and what is more like long-term short positions that are impossible to cover without exponential loss, right? It's really that the short position is divided up. It's not all just, oh, this is short, right? It's this is short at this level, this is short at this level. Some of the shorts currently are profitable, right? Like any shorts that have occurred between the last peak and the low here, those are in the money, right? But anything that occurred under this point is a loss. And the thing that drives this is the fact that this amount is much greater than the profitable shorts. And then also when these run-ups occur, they trap these short positions, right? After MOASS, I will buy my yacht, name it No Toys Here, but have a painting down of a glorious pickle holding an ape. Oh, thank you, Janitsky. Sorry you took me seriously. I was trying to argue for holding. Oh, okay. No worries. Thanks, Gaz. I've never exercised an option before. Will exercising still work during halts? I'll be able to sell options during halts. Are there any problems to anticipate? So you should be able to. You can't sell or buy during a halt, Renzer. To exercise, you have to. If it's not, you know, going into close on a Friday, you have to call your brokerage and have them exercise for you. The ideal way to do that is to, depending on your brokerage, is to sell to exercise. And so that means is they take the 100 shares. Say we're trading at $1,000 and you have a strike of 100, right? To buy your 100 shares is $10,000. They will sell 10 shares and deposit 90 into your account. This is sell to exercise. Some brokerages don't have this option, and in which case you will have to exercise manually, either by selling another option to fund the exercise of this option, or you'll have to sell 10 shares to get 90 here. But ultimately, the benefit of that is they have to then go find, 100 shares, which then further drives the price up, right? That's like a market maker's nightmare, is like a price running through the roof and then options getting exercised all over the place. Yeah. There's problems to anticipate at the peaks with selling options because of the IV. The price of the contract will be much, much higher than the price of shares. That's a thing, real Slim Pickle. That could really happen. Sorry, I didn't realize I got a Ko-Fi donation. I didn't even have that open. Usually, people don't donate too much on the. Sorry about that. Oh, LM, just got up to the part where you're telling that no one will be holding our hands, and that's why you're telling all that so that we can do well still. And I have to admit, it made me tearing a little. A million thanks to you for that. Thank you, LM. I appreciate that sentiment, man. Thank you, Han. Yeah, $1 million is a lot of money, and it's not enough to retire. But if you have 10 shares, that $1 million comes at $100,000 a share, right? It's multiplicative based on your position. That's why I said it's easier for someone with, and that's why I think like the X and XX holders are so important, because it's easier for them to hold than someone who's like, got 4X shares and they're realizing like $1 million profits at like $25,000, right? Just obscene profits. Or that's too many zeros, but or $2,500. Like people have 4X and 3X shares will be billionaires. Possibly before the peak ever occurs. Absolutely, Deku. See you later, man. Oh, yeah, I think there's going to be a ton of exercising during the run up. I have a shitload of contracts I'm going to exercise. For fun. So when you're talking about the stock actually able to run up into the tens of thousands or millions, how long are people theoretically going to have to hold to collect that? Like I said, Johnny, it could be really quick if the price gaps up. It could be several days if it doesn't. If the selling is more consistent through the run up, and if people hold tight and don't fucking sell, it's going to gap up. But if they don't, it could take a while. And the longer the run up takes, the more paper handing will be encouraged psychologically. Yes, Ryan. For brokers who don't manage volatility well, will manual trading be during forced liquidation reduce volatility and allow those brokers to reopen their services? Probably. Although in my exit DD, I recommend that everybody gets in contact with their brokerage and finds out other ways to sell than, their web apps or their websites. So like their mobile apps and their websites, those can fail in those periods of super high volatility. Could you do a small chat about legal ramifications, why you won't be streaming during MOASS, as well as why those legal ramifications are leading to the price movements we are seeing? Not really. It's pretty obvious, right? I don't want to be sued or blamed for anybody selling at a price that they weren't happy with. That's it. I mean, like, the lawsuits would automatically they would just be thrown out of court anyway because of the disclaimer that none of this is financial advice and it's only for entertainment. But, people could still attempt to make a case, and then you still have to go to court and, like, show up, and it's a pain in the ass. No problem, Johnny. Is there a danger of broker sell limits during gap ups? No. Broker sell limits are just a range. Oh, are you talking about brokerages that say they have like a sell limit of X dollars? Like that's the highest transaction that they'll allow, Brian? Because they have ways on their ends of circumventing that. Supposedly, like I know WeBull had a cap of 3 million, but they're looking into changing it right now. Some other brokerages have like transaction limits, but that just means that like they'll still transact your sale. It's just maybe they break up the deposit or they break up the sale. So they could either break up the individual share, like if we're at 9.9 million and you sell a share, they just break it into fractionals and sell each at like 3.3 or 3 million. But they are legally obligated to not only sell your share when you ask, but to sell it for, at or near the market price. So if that market price is up or above, $3 million, then they'll have to facilitate that on their end. They'll lose their licensing if they don't. Can much of the value of an option increase so much that it hurts liquidity? Meaning no one wants to pay that much for a contract at a perceived peak. Yes. This is why exercising options and selling options, if you intend to sell your options, selling them on the way up is better than trying to sell them in the peaks. Because the implied volatility could mean that the contract is more expensive than the underlying shares. like significantly, right? And then like people aren't going to want to buy that. That's happened in the past. Actually, in March, here's a fun story. I had calls in March of 2008. I had a straddle on the SPY, or not 2008, 2020. Sorry. I had a straddle on the SPY, so that means I was both short and long the SPY. Straddle. And when the SPY tanked, like that COVID correction, my calls at the bottom were in the money because of IV. Because the IV increased so much that my calls, which were at a high strike, the IV was so high that even though the price was down here, these were in the money. Now, was I able to sell these? 2 of them, I think. I had like 33, if I remember correctly. And I was able to sell 2 for a profit. But as the price started to correct, I unloaded more of them, but I lost money there, but I made so much money on the puts that it wasn't a factor. But that's an example of like the type of situation that can occur. So if we shoot up to $10 million and you have like a $500 call, and the price of this $500 call is, you know, I don't know, say like $674 million, like no one's gonna fucking buy that, right? Because they could just buy the shares for, you know, that, well, I mean, it would be higher than 674 million, I guess, because the intrinsic. So 10 million. I can't use an example here. Actually, I have to do the math. So say this calls like 1.2 billion. Like, but they're not going to buy that, right? I did some research on how much money you would need to make 300K a year passively. Number happens to be around 3 to 8 million. Sounds about right. It's sort of in between there. It's around like 4 to 5 million, cool daddy, for 300K a year passively, but you're not factoring taxes. You have to factor taxes into that because those are still capital gains. Yeah, absolutely. We still got 10 more minutes to answer questions. Will you buy puts at the peak? Fuck no. They'll be so expensive. If you buy puts on to play the downside of GameStop, you need to buy them like now, and you need to buy them way the fuck out here, right? And then just hope that MOASS happens at some point during that time scale. It's a risky proposition. That's probably what a lot of those like $10 puts for that expired this week are. Is that people expected MOASS to happen? They bought these for, you know, $5 a contract in the hope that the IV on the downside of MOASS would allow these to profit. Because you can't buy them at the peak. What's your opinion on reinvesting in blue chips instead of leaving cash in the brokerage account to limit risk due to withdrawals, daily maximums, e.g., IBKR is 60K a day. You can wire transfer more than 60K a day out of your account, on IBKR. Fidelity allows you to move. You can move large sums of money. You just have to go a different route. You have to probably, call them and set up a wire transfer from them to your bank. But yeah, I mean, you can reinvest the money in your brokerage. It may be a good time to do it. It may not. Is it safer in corporations? Maybe, but you could also, if the market's beginning to crash near the end of MOASS and then it finally comes down and you dumped all your money into like blue chips and those come down with the market, then you could lose a massive part of the gains that you got, right? So like if you dump all your money into like Apple and shit and MOASS ends and these come down 60%, you're going to lose 60% of your money, right? And I guess if you wait a long enough period of time, they should return to that level, but you don't know how long that'll be. The incoming economic issues project a period of long depression, so it could be a very long period of time that you're bag holding those blue chip shares, right? Having your bank set something up where they split your money into as many insured accounts at their insured limit as possible is probably best. But if JP Morgan and like Citigroup fail, it won't fucking matter where you have your money at that point because the dollar's probably worthless, right? So if you're betting that the bank you deposit your money into is going to fail, then it doesn't fucking matter anyway. Like that money's gonna be that just means a collapse of the entire American financial system and economy. So your money's just fucking worthless at that point, no matter what. I know Fidelity will split your money into like $1 million limit accounts and then group those accounts. It's usually how it's done for, banking for richer people. There's lots of options. I'm not a banker. Talk to one. But just so I can strap in, how long is a little bit longer? I'm not going to tell you that, Cool Daddy. Because I don't know. If I knew, I might still not tell you. But I definitely don't know for sure. They could. I think the can kicking is not without reason, right? I think maybe they were betting on a market crash sooner. Right? I think they were expecting the market to fail much sooner, and it's not. And J-Pow keeps kicking the can down the road. And I think they were hoping that in the event of a market failure, they could get enough people to sell out of GameStop that, they wouldn't have to worry about it, or they could, blame their closure and loss on the market crash and not on their short position in GameStop. Which would allow them to, reopen a new hedge fund later down the road and continue to practice in the business that they do. But it's just not looking that way, right? And now they've compounded their position so much that it's just... No worries, so what you're saying is convert MOASS gains into seeds. See you later, Dangerous Dan. Well, we got about 5 minutes left, guys. Any other questions for this week? For all of you Cornishons that came in today, thank you so much. I wish I could do this every week, but it wouldn't be fair to the people who pay more, unfortunately. But I'm glad you were able to come in and get a little taste, especially after such a rough week. Thank you all for all the support that you guys have given me. It's huge. You guys are definitely the core of what allows me to keep doing this, and I appreciate that a lot. See you Monday, Fody. Last chance, 4 minutes for questions, guys. Next week should be very interesting. What's your take on iced dirt chai? Never had it. Thanks to the whiteboard advice, I have a whiteboard by my desk with my goals and debts I want to pay off, my price targets, and ISO strategy. You're welcome, Eddie. Awesome. Yeah, whiteboards are the best. I have a couple. They're awesome. The only problem is when I'm talking to people I know, I tend to use the whiteboard to discuss things, which I feel like makes people feel stupid. But I feel like it helps me better express myself. Are you okay? Yeah, I'm absolutely fine, Snickers. Couldn't be happier. This is me at peak elation. This is about as excited as I get. But mentally and everything, yeah, doing great. I'm stoked. I own a shitload of my favorite stock, and I bought it for pretty cheap. I couldn't be happier. Thanks, Ryan. Price point for GME post MOASS. That's interesting. Assume a suppression of the short position. So if we take that estimation of 226% short, assume 226% higher than the price it's currently trading at. I feel that after the squeeze, it's going to dip for a brief period due just to the sell pressure because it's going to be so oversold immediately after the squeeze. But as people buy back in, I would expect that they would have to split the stock in the near future. Can you do a coffee maker espresso selection stream for post MOASS? Maybe. Do anything fun this weekend? Make videos and write DD, the same as every other weekend. Why do the triangles only work on logarithmic charts? They work better on log charts. They don't only work on log charts. But you use log charts because GME has had a lot of range in its price movement, and log charts consolidate that better. So you're able to visualize more on a logarithmic chart just because the massive amount of price action that's occurred is consolidated over a narrower range. That's up to you, Cool Daddy. Absolutely, Osnadian. Thanks, Snickers. I appreciate that. Calm yourself during a run up. Fucking walk away. I don't know. I don't know how to calm myself during a run up. And I've been doing this for years. I just sit in my chair and into the microphone. Go to the bathroom. Reset your modem. Whatever you got to do. Why did Superstonk turn into an absolute shitstorm? Fuck if I know, man. I don't care. I went over that at the beginning of the stream. Dre Danger Dan. All right. Thank you guys all so much. You have a wonderful weekend. I will also attempt to do that. Thank you for tuning in, and I will see you all bright and early Monday morning. Also, if you can, please behave yourselves in the Discord, as I don't want to have to go tamp down flames over there. It's a pain in the ass. Later, guys. The TADD for HNT. Maybe Cool Daddy, but I don't have the time right now, man.